I'm Darren McDermott and you're watching Forecast. Today we are going to have a look at the euro dollar with Kenneth Broux, Senior G10 FX Strategist at Societe Generale in London. Kenneth, the euro dollar was muted today as core consumer prices in the euro area came in as expected. In the short term, you see this pair at the 136 level. Can you tell us your reasons for this and what data this week you think could possibly shake this pair?
I think it's going to be very hard, I think, for euro dollar to extend to the upside, and we think that inflation numbers that come out later this week, we will get the first estimate for February data, are likely to show a decline to 0.6%. This fall will, I think, again add to the suspense that the ECB may send a very dovish signal at the next meeting on the 6th of March. I think the other thing to bear in mind, however, is what Fed Chair Yellen will say on Thursday when she will present her the second testimony to the Senate this time, which was rescheduled. It'll be interesting to see what she has to say after the run of weaker U.S. data this month, whether that does make her sound a little bit more nuanced with regards to future tapering prospects. If she doesn't change her tone from the first testimony to the House, then I think, again, there's a reason for euro dollar to come off towards 136.
Kenneth, in 6 months' time, you believe the euro will drop to 133. Are you expecting it to drop due to stronger US data in the coming months?
Yeah, I think there's a bit of uncertainty because of what's happening in the US in Q1, because of the unseasonably cold weather. We think there's going to be, anyway, if that is going to be confirmed in the GDP numbers for Q1, we think there's going to be that's going to be transitory, and we think there's going to be a pickup again in Q2. The Fed will simply continue to taper, and we think US 10-year yields should climb towards 3 and over 3% later in the first half. So I think there's in the contrast is that in Europe we still have a European Central Bank which is thinking very hard about what it should do, whether it should leave policy unchanged, or whether it thinks that actually the disinflationary pressures that it is seeing are serious enough to provide further stimulus. So I think there's these two diverging paths between euro and US, of course, monetary policy, and then on the growth story that should really help euro dollar to retreat towards the 133 area.
And in longer terms, how far do you think the euro could actually fall?
I think over a longer term, say 9 to 12 month period, I think 125 I think is not unrealistic. And I think what you have to bear in mind then is that that the Fed tapering does conclude, of course, that the asset purchase program is reduced from the current 65 billion to zero. And then the market starts looking forward to pricing a first increase in U.S. interest rates. Typically, when short-term interest rates start rising, or implied short-term rates are rising anyway, that should support a currency. In this case, the dollar, I think, is going to do quite well. We have a lot of uncertainty about Europe again. I think the European Central Bank is not in any position or anywhere near to raising interest rates, of course. And that is going to be quite pivotal to get us down to that 125 level that I mentioned.
Kenneth, it was a pleasure speaking to you today. Well, viewers, Natalie MacDonald will be bringing you the next episode of Forecast on Wednesday. Goodbye for now.